Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
We have a lot of news today. 7 o'clock this morning, we had a lot of U.S. British news. That's already behind us. That was about 30 minutes ago, and we do have some Aussie news at 7 o'clock. That's later on tonight. Other than that, it should be relatively clear. Be careful of the British pound today. A lot of news that was affected. It should have already played out by this time, but just be careful. And then with our Hercules, we're showing pretty much U.S. dollar weakness pretty much across the board. And we have New Zealand and Aussie strength, New Zealand and Japanese strength. Let's just focus on probably the Japanese. This seems to be flopping around a little bit for who's going to be the leader of the pack here. But right now I'm looking at the U.S. yen pair. And I did enter that trade right here. I did a little bit of it. Yes.
Al, can you please let Eva in the room?
Oh, she's here. Okay.
Thank you.
We could do that.
If she would show up and be on time, she'd have been in already, Christine.
I think she's going to bite you for that one. She spends 20 minutes trying to get in.
Oh,
Yeah.
I can also
She-
Brian.
doing her hair and makeup, apparently.
Morning, everybody.
All right. So anyway, this U.S. yen pair, basically, we have strength of the U.S. Japanese yen. Japanese yen is second currency of the pair. Dollar is weak. And so we had a nice little drop here. When I saw this little pullback back to this blue line, I did a sell stop right here, right around the 109.42 area. And so I'm in this trade. I'm still not broken even yet. The spread, we have about 1.3 spread. The spread got me in before. It got me into the trade. But right now, my stop, I'm still using my basic 15 pip stop, 7 pip target. And now my target is all the way down here, right at this yellow line, which is basically it's the 25% overshoot of the down move. So we've had a nice little down move. It hit the blue line, bounced off the blue line, came down, bounced, closed. So we had this pass and check. It passed it, closed it, came back up. The blue line held. And now we're looking at the moving averages are in the right direction to go short. And we're just going to see if we can follow this thing down. Try and at least get our 7 pips out of this move. So that's where we are. That's where we are right now. We're just barely profitable on this one. But it's going to go all the way down here. Pretty much we have this from this blue line to the green fib line. That's going to be about 10 pips, I think. Actually, that's going to be about 7 pips. 7 pips is right here, so we have to go a little bit. Remember, on the yen pairs, I prefer to use actually 5-minute fib lines because they're more like 7 pips apart. Expand this out a little bit. Expand this out. Let's do an auto thing here. Oh. There we go. So we see we had the nice little drop. I took my extension tool down, pulled back just to see it. It was almost not quite. It was about 30. Oh, we got a 23% pullback on this. And right now, my first target would be from this move to the pullback. My first target would be right around in this zone right here. I think that's going to be a little bit shy of our 7 pips. But from the blue line to the, yeah, that's right, 7 pips, right, the 100% retracement. And we'll see if this blue line can, if we start getting a pass and come back and check it and then go up so hard, I'll be out of this trade before then. That means it's starting to reverse on me. But my my target zone is going to be right here, right around the 1-to-1, which is going to be this little box right in here between the 61.8 and the 78.6 and the 1-to-1 ratio. So this is going to be this will be a target. And about my 7 pips is down below. So I might not quite get my 7 pips out of this, but we'll have to wait and see if the strength is, because the strength, when we looked at our Sherlock tool, it says 109.30 was the basically, and that's going to be roughly this little zone right down here, where the next point of resistance of demand is.
Again, that's that blue line on that 15-minute chart, so it's going to hang there for a bit, I would guess.
Yeah.
And you do have on the 15, there is no real Sherlock zone, but if you do look to the left, there is a wick over wick on the long candles. The long extended candle has a small wick over wick, which on a lower time frame would probably be your demand zone. Otherwise, like we said earlier, Al, there is nothing holding this thing from not going quite a bit down.
Here's a nice little red candle. Now this is a nice little long extended range candle. Came back, hit the blue line, came back, tested the blue line, came back, broke the blue line, and now this is where we are right now. So if this thing can start trending, this is basically a drop, a little bit of a base. Now with this drop, if you use the method with a drop-based drop, here's your drop over to here. And here's your basing. So it comes back up. Here's the basing. That's how much it retraced back. And then normally if this is at like 1, this would be like 2. Usually if you get this, you can oftentimes get a 1-to-1 of this move down here. And if that's the case, you're going to be looking at all the way down here, which is right where our demand zone is, right here in this little area. Here's the 1-to-1 ratio. And you can take this and just move it down about like that. And so somewhere in here would be a real reasonable target for this next down move if it can push down. And that's what the plan is right now. And my first target's right here.
Call that number out, Al.
That target, that is at 109.34.
Yeah, that's where I'm at too. Okay. And I'm actually on this one live.
And so we're just going to keep watching and see if we get a 15-minute close above this blue line, we may start, but all their moving averages are pointed down on the 15. Now we also got a close and a break below our 62 moving average. Excuse me. Here's a 62 on the 15-minute chart. Here's our 34 moving average. Let me double check to make sure that's the right one. It changes, but it doesn't always propagate over to where I want it to be. This one should be 62. We want this one to be same chart 34. I'll have to figure out how to lock that in. So right now, all of our moving averages on our 15-minute chart are pointing down, pointing the right direction. Green over the yellow, yellow over the orange, orange over the blue. Let me slide this down here a little bit. And on our 5-minute chart, same thing. Again, I need to change this again. See this chart 34. I figure out how to lock that in so it doesn't keep moving back on me. And here again, we have the 62, the 34, the 13, and then the 5, all still staying in the right direction. And so as long as this can respect this 5-minute 13 moving average, we're in good shape. So what I'm going to do is I'm going to take this off. I'll put this one on so we can see the red bands. As long as those bands stay red, now we can stay in the straight. And let's see if there's anything else we can be looking at while we're waiting for this thing to develop.
There's a possible long on gold, Al. I know Eden said that he was in it, and I was just looking at it.
Okay, let's take a look at that. Let's see, gold. Let's take this one, and we're going to duplicate this chart. And Find gold. Here's gold.
It's just pulling back
gold.
right now.
Okay, let's see where our fibs are on the 15-minute. I'll start with that.
He's in it on more like a swing rather than a scalp.
For the gold?
Yes. With an entry was 1809.39.
Well, that's a good number. That's a good number to be entering on. Here's our zones right here. These are 15-minute zones. Here's our blue line. Here's our red line on the 15. Come over here to our 5 and we'll tweak it. Looks good. And right now it's nice little move up, pulled back from this. It's pulled back, it's pulling back to the 50%. Well, not 50% of the zone, but it's not pulled back to 50% of the move. This is a nice little, probably about 25% of the move, which is not bad. And I'm going to take it from this last retest right here. Right at a 40% pullback. And gold is, I'm not sure what how gold's going to correlate with the different currency strengths of our 3 majors. So I can't really use that much because I don't know the correlation with it. I don't usually trade gold.
It's the U.S. Sal. If the U.S. is down, gold tends to go up. Yeah.
Okay, U.S. is weak, gold's down. Nice little pullback right here. Let's take a look at our 1-minute chart and see if we can find a place to get into this thing.
That's a nice thing because that correlation has not been holding true for a while.
They've all been kind of all over the place.
It's all over the place. Yeah. That used to be a real key one that you would know, but I believe because of cryptos becoming more and more of a hedge, the correlation between gold and the dollar is less, but it's still there and needs to be recognized. If you're looking longer term, Al, sentiment is that this is going to continue further down in the long haul.
So
even though I would suggest you'd make sure that your swing trade is a shorter term swing trade, not a long termer.
This could be somewhat of a contra trend trade to that aspect.
If it's longer, depending on how long term he's looking.
Yeah. Now, if you got in at 1809, what did you say you got in?
1809.39.
Yeah. So he's profitable already. So that's
you
good.
Put his stop loss and take profit if you want that.
What's your stop loss?
Stop loss is 1804 even.
1804. Hang on, let me find that. 1804. That's
way down there. You're on the 1 minute though, so it's going to be like
it looks like
it's going to be really far away.
Yeah, but I think you could probably move the stop up some to lock in some profits at this point.
Okay, and the take profit was 1826.
26. Let's go take a look at that part. 26. A lot of times too with stop 26. With stops, a lot of times I find out if you're, especially when swing trading, you almost better just leave the stop right where it is. Maybe trying to get to break even as soon as you can. But the more you move your stop, the more you're likely to get stopped out because of the stops.
Mm-hmm.
You agree with that, Brian?
Absolutely. Pick your stop, and then if it's truly a swing trade, then I wouldn't move it until after the day's candle's been made. Ever. And when the picture changes.
I think that's a really good target. That's a nice little extension. It's way up here. It's right on a fib line.
Mm-hmm. Overall, I think that's a great trade.
Yeah, I think you did good.
As long as you're keeping a shorter term, just keep watching the time, each, maybe a 4-hour chart, see if the picture changes at all for you, maybe 6-hour chart, something like that.
Yeah, I'd be a little careful of the fact that it did not close above this little pivot right here.
Mm-hmm, right.
If I look on a higher time frame, let's go to your 4-hour. Whoa. Let's see.
Hit auto, Al. Hit auto. Remember auto at the bottom?
Remember auto. Remember auto.
I got to give you a refresher.
So you've got this pivot right here. This was back on the, let's see, that's back at July 15, the middle of July. There's a little pivot here. Rejected it. Came back up. Rejected it. Came back up. Right now so it's been, this area's been hit 3 times. I would be drawing a little box around these wicks. I'd use this for the high one. Oops, my box. I'd be using this one, and I'd be coming over here, and I'd be using the body of this one. This would be my, what I call my supply zone. You can see where here's the origin. Now we actually had more of it way over here, but that's a whole nother story. That's from last summer or 2 summers ago when I got up to $2,200. But here's a nice little pivot. This was from basically this past July. We ejected it, came back up. So this is a real significant area. Once it breaks this area, then we have some pretty good sailing all the way over till it's, let's see, let's spread this out a little bit here. Yeah, once we break this level right here, you come over here and see this big body here? There is no wicks anywhere above up here. So once it can break where this green dotted line is, I would say you've got a pretty good shot going all the way up to the 1859 area. But it's got to get through that area first. It's finding there's something right in this area that's causing it. If I scale out, I'd be willing to bet you're going to see some sort of a base drop right in this area right here. Let's pull this out to a 30-minute chart and see if we can find that. We gotta go further back. This is where that Sherlock comes in really handy. It just kind of finds these little zones right in here and there. See that? Here's the little drop, base, drop. So this area right in here is going to be critical. You're going to have it's going to get a little bit of a bounce over this little wick over wick area right in here. I guess didn't pull it out long enough, far enough. Oh, anyway, you get the picture anyway. I'm not gonna play around with it anymore. Anyway, that's what we're looking at. So that should help you out. A minute. So just remember, you got here's a box right there. So here it is. That's your supply zone, and like I said, we did have a little bit of an area right in that, right up here a little bit higher is where it was. Why isn't that going over? So anyway, that's cool. Any other questions out there? Let's take a look at our US 30. See how this one's doing. That's still just hanging in there right now. Not going anywhere, not doing anything special.
Just doing its thing.
Just doing its thing. This one's going to take a little bit more time.
All the moving averages are going to waiting to catch back up again.
Actually, a little slow for a Thursday. Usually Thursday mornings are usually pretty robust. Let's see. Let's see if there's anything else on the horizon here. The yen is still strong. Dollar's still weak. We could take a look at maybe the Swiss yen, or U.S. Swiss to the strength of the Swiss. Let's try that one. Which is
an overall swing down. That's the most traded position right now is long on that one. So we want long term, you want to be short. So that's if you look at the big trend, it's going to be down, which is crazy to think.
So SSI says we should be taking it.
Yeah,
SSI says to take it long, and so we would take it short.
No, SSI says the majority of the traders are taking this long.
Okay,
so we want to take it short. Absolutely.
Okay, so this doesn't look so. This looks like it has.
If you're swing trading, yeah.
The swing that SSI doesn't really work that well on a day trading scalping area because it's you're just looking at a little bit different parameters. But
that Hercules takes the place of it.
Yeah, Hercules pretty much does. So here's our zone right here. So here's our red zone, here's our green zone. And we're going to tweak it on our blue line. Make sure we're on the blue line. Right about there. That's good. We're going to lock it in so it doesn't move on me. So we are now it is coming down into the lower 25%, but we look at the strength we have here. We have 5-point spread. We have a 4-point spread. We have, right now the dollar is on a little, this is the pullback. The dollar is pulling back on this. I'm going to start looking for the drop. Looking for the long extension, looking for the retracement. I'm going to be looking at a retracement pretty much right. Here's a little green fib line right there. Let's see if that's, I like this blue line right there. There's a 2-minute blue line right there. I don't know if you can see that. I like the blue lines, but I like blue lines to blue lines. 2-minute blue. I like this little pullback right up to maybe about to this area right in here. And then once it kind of pulls back in that area, I'll take it short, or I can take it when it breaks through the bottom of this little wedge. Right now, I just formed a little bit of a triangular wedge. Now, it's not really quite a wedge yet, but it's getting there. And if I draw my triangle tool, I'm going to use this. This is a little drop. You can see this little basing right here. I'm going to start with that. Let's see where it comes to. So right there's that point, this point. Now it's making it a little bit higher high. And then we have the trend. We have our triangle right there. This other way so you can see a little bit better. There's our triangle. Now it is making a little bit of a higher high on that. Let me back this off, see if I can kind of flatline this thing a little bit. So since this part is a little bit higher, it was rejected there. Let me start this over again. It's making a little bit higher highs on this pullback. Here we have somewhat of an ascending wedge. Now we don't know where this D is going to end up. And right now, if we flatlined it, we can see where it's starting to break through the top of where the B is. And it's right there at a fib line, I believe. No, that's not, that's a price point. See, I'm looking at this as being somewhat of just a little bit higher. It's just making, it's actually, it has a little bit of a, I don't like how steep this is right now. I like this part. I like this one a little bit better. From here to here to here to here. I like that. There you go. That's a little bit better. You had drop. You had a little bit of basing. It's still making some new highs, but if it breaks through the bottom, which it still has a strength. Now this one's showing the dollar's a little bit stronger, but this is strictly because of the pullback. If you look at the other 3 chart time frames, the Swiss franc is still stronger by quite a bit. So again, I'm just looking at this as being a pullback. When we get the break of this wedge, which is here, we're getting right in here. Again, I'm looking for something that looks a little bit like this, where we have, it came up, pulls back, closes, gives me a retest of the wedge, closes. You see, Now I want to see this thing stall a little bit, come back up and retest, and then come on down. So let's respect this. That was a nice big rejection of that little wedge area. And with that, we could almost take it as a sell stop right around. I'm going to do a sell stop right at the bottom of this pivot right here. So sell, stop, 15, 2%. And we're going to do sell stop at 90.53 if I can get in there. And then we're going to go for 7 pips. Protect, take profit, 7 pips, 15 pip stop. There's our target, pretty much the green line. I'll just move that back up just a little bit. We're in the trade. Looks like we're in it. And my stop can be, so we can get rid of all this stuff now. And I would have my stop being, if this thing, well, I did get into it, but now if it comes up and breaks through this, we may be going up higher. So at this point, I'm going to tighten up my stop. I always start with 15, but I'm going to just move it up about halfway in between these two levels right in here, just to save myself a few pips if it goes that way. If it just plows up there, but I don't think it's going to go that fast. And we have a little bit of a trend line. If you draw the major trend line from this bit, this peak, you look for the pivot high, strong move down, the rejection, and then the point where the next rejection is, I use these two pivots. And I want to have my stop above this trend line, which it is. So this trend line is still valid. This thing is just a nice little rejection coming back down. All of our moving averages are in the right direction. It did have a little bit of a stronger pullback, but that's okay. Swiss is still strong. We're back on 1 minute chart. You can see where it flipped over. Dollar was strong on the pullback, flipped back over, and now we're going back up to see if the Swiss can get back up to the 7. The stronger the Swiss can get, the weaker the dollar gets, the bigger spread you have here, the more likely that we're going to hit our target. And how's our U.S. yen doing here? Still, it's a U.S. yen. U.S. Swiss.
It's still hanging right there at the blue line.
That was still hanging right there where it was. There's not moving any.
That blue line's key. Once it wears out, it'll either fall or it'll take off.
Brian, are you talking about the blue EMA?
I'm talking about the Atlas tool blue line, 15-minute blue line.
Okay.
Yeah,
which is pretty much where we drew the Fibonacci zones. We drew that off the 15-minute. The 15-minute. Whoops! I didn't keep getting the wrong one here. That 15-minute. When we drew this between. These are 15-minute fib lines. These are the Atlas fib lines. The red one, and then we had a green one. But any 15-minute line is going to be blue on the 5. Is going to be blue on the 1 minute chart. So that's still going to be a major. So basically, we're looking at a blue line, but basically it's our fib line that we drew for the 15-minute zones. Now that's the blue line that we're actually talking about. But it's also the same blue line on the 5 minute for the Atlas 5 minute, and the same blue on the 1 minute.
I was just confirming because when you were on your chart, there was a blue line. You see, I guess you drew it by your yellow drawings. Like that's why I was just a little confused. I wanted to clarify. Yeah. You see the blue line that's going kind of diagonally above where it says 2 minutes.
Oh, this one here. Yeah, that's just a
right.
line that we drew.
Well, that's what I thought it was, but then when he said Atlas, I was a little like, wait a minute, no, I thought Atlas was that. So I'm like, that's where the confusion. I just wanted to clarify.
Yeah, that's good.
Thanks so much.
And so we wait. So do we have a little bit of a spread? Well, the spread's not bad, still under 2. Anything less than 2 pip spread, I'm okay with. When it starts getting above 3 and more than that, then I start deciding whether or not I really want to use that pair or not. But right now it's still hanging in there, still doing its thing. We had a nice little drop, nice little pullback. And I do think that if from the retracement standpoint, you can go with the retracement tool from the last hit down to where it rejected. And then we're looking at, this is our 120, and you can see that's right where my target is, right here by this area right here. So here's my target zone. And so this is going to be our target. And then we can move this away so we don't have so many lines away. And we just watch the trade, see what happens. We planned it out. We did everything we can do. Now we have to wait and see if everything still seems to fit.
It'll either work out or it won't. My bet.
It'll work or it won't.
That's a good position.
I'm pretty confident on that.
It's 50-50. It'll work or it won't work.
You can see it's kind of in a little bit of a channel right now. Where here's the we had this low. Here's another thing you can look at here. You had this trend line here from this pivot to here. You can see where it broke. If you look real closely, let me expand this out here a little bit. You'll see where it did that pass and check. Here's just the pass. It passed the trend line, broke the trend line, came back, retested, and then it took off. So right now it's pretty much hanging into this channel. So right now, if you want to turn this thing into like a swing trade, you could just, as long as it stays in this channel, just stay in the trade. This could be for a couple of days for that matter, or at least until the end of tomorrow. But as long as it stays within this channel, you can still keep on playing this as a swing trade. Now you may take a little bit of heat if you got in down here. You may take a little bit of heat as opposed to getting in up at this point. But it's respecting. We had there's a nice little pullback. I can even take it to this little pivot right here. This was a rally, base rally, and it came back down. This is our first hit of this lower trend line right here. That's the first hit. Here's a near hit, rejected it, and we're looking to see it come down to, see if it comes down to our target. This is how you can take a scalping trade and turn it into more of a swing trade or a day trade.
And what I like to do when we do scalping is, if I really think it can go long, once I've hit my first target, I move my stop to the break-even point. That way it doesn't cost me if I end up going the other way.
Yeah, once you move it to break even, you can kind of walk away and just say, well, that's whatever happens.
Whatever happens, happens.
You don't want to give it up, but you just know you're not going to have not going to get wiped out because you weren't paying attention to the trade.
Right.
Right now it's into this little channel wedge right here. As long as it stays in there, you can still hang into that. So I'm not going to be too concerned. If it starts breaking out of this and starts breaking these moving averages, well, you can see my stop is way up here. So I'll just pull the trade myself. And I could, right now, I'd be looking at, if I got in at 90.53, even a 5 pip stop, 53 to 58, it's still going to be, you could still, if it breaks through here, you can still save yourself quite a few pips. But right now, I'm just keeping it out of harm's way right now. And that's one reason why I use the 15, just for in case some news announcement that we're not aware of or forget, it kind of keeps it out of harm's way so that the market makers can't just go and grab your stop and do what they do to everybody else. But I'm usually watching my trade. I usually know where I'm at and see what's going to do. But if it just pulls back up here a little bit and gives me another little, and then I may take another position to dollar cost average. That way the average, rather than being down here, my average would be up here. If I get a second position up in this area and that gets filled, my average is here. I don't have that much far to go to be able to get back to break even again. Right now, everything's still looking good on this. Now this one is playing some games with us here.
What's your Hercules tool saying for the US yen? Is it still US strength to the yen weakness? Or, yeah, US weakness, yeah.
US is still relatively weak. Now, we did get a little flip here on the yen, but the yen is showing. Now, the yen was all the way up here at the top. Now, the yen's down at the bottom. So, the yen is getting some weakness right now. That's more than probably just a pullback area. So, we've got to be somewhat careful with that.
I'm still going to hold to adding to my position at the 109.50 for the short, but that's going to be tightening up my stop, which is okay too.
Yeah.
I have a feeling, I think this is a general pullback. Just another look at kind of coming back to the median price where it was. We'll see.
See where some of our zones are here on the 5 minute. Here's our green fib line. And remember, there's three, all your 2 minute lines are in between the green lines. All your green lines are in between the 15 minute lines. If that makes any sense to anybody. 5 minute green, that's right there. 5 minute. Why is that not doing that? Five-minute green. I wonder if I made a mistake, if I did something different here. 5 minutes, try it out. There we go, that's the one I want. And then we have the 5 minute red, which is down here. I can get rid of this one because this one isn't working. Get rid of that. So right now it's just as long as it stays within this area, I'm still okay. Let's see what it does. And we had a little drop, had a little base. So there's a little bit of a retest zone right up in this area. I may want to move my stop just a little bit above that or get out of it now and try and get a better position. This is retest. I'm going to scoot that up just a little bit. And we have a trend line. I told you usually the pivot from the first long move back down to the rejection to where the next move down is. See if I can line those up. Here's the first hit. Actually, this all hit. Here's a hit. There's a hit. There's a hit. My stop is above the trend line. We could take another, if this goes on up into here, I may take another position with a very, very tight stop that if it keeps on going, I'll take both the positions out. If it gets up in here, it starts to reject, getting a little bit weaker, maybe flip, I may take another position to dollar cost average this one. But right now, it's not still not that bad. It's 109.48. And right now, it's only 7 pips away. Remember, we gave it a 15 pip stop. We have a little doji right in here. So that's almost like a little level on a level. So it's got to get through this little doji. It's got to get through this little doji up here. And by that time, it's thinking about trying to hit through some brick walls. It's going to lose steam every time it gets through one of these brick walls. It's going to lose a little bit of steam. Right now, this is just a normal pullback. It did reject. It did come back down. It's basically what it's doing is retesting this blue line right now. We did get the close, but it still has to come back down and retest. If it comes back down, retest, and can't break through, then it's probably going to go up higher, in which case I may just reverse positions. Especially with the fact that the yen is now starting to show some weakness down here on all 4 time frames. My Swiss trade.
Has the U.S. taken over on any of it?
I don't. The U.S. still seems. U.S. Well, U.S. on the 5 minute, U.S. took over the Japanese yen on the pullback.
Okay.
But basically, all in all, the U.S. is still weak. The Swiss is still stronger. So our U.S. Swiss trade is still okay. As we do get closer to the U.S. market opening, then it may start changing a little bit. Right now, we still have, this is still a retest area right up in this area.
Almost to my entry.
For your second position?
Mm-hmm.
Let's see where our fib line is. Fib line is.
And I'm in now. Second position is in. And now we watch and manage. That's a pretty strong candle up. So,
and actually, that's a good thing. Usually, when you get a really strong candle up into a zone, there again is where the people that don't know what they're looking at. They will say, "Oh, this thing's starting to break out. I'm going to jump in." Well, this is where all the sellers are right here. And a lot of times you get those real strong moves right up into those zones. And the stronger the move is going up into it, the stronger the move is going to be to come back down out of it. When you get these little lollygag where there's this little, just real gradual moves, like this is a pretty good little move right now. This risk, now I look at it, it took off, left some of his buddies back here. It's coming back up, pick up some of the buddies, and then maybe take off and make the bigger run. But we'll see. We'll see if this zone holds. Remember, we're on a 1 minute chart. Let's go on the 5 minute chart, see if it doesn't look quite so. This is where if you start having your emotional inventory costing too much, just go to a higher time frame. It's not quite as, doesn't look quite as bad. I like this real strong candle down. Now it's coming back. So this is a strong rejection of this area. Now it's coming back to retest. We do have our moving average up here. We have this 2 minute line, and our spot is way up here still. We don't have the crossover of the moving averages yet. They're still showing red. We did get the 5 minute, got a little bit stronger with the Swiss franc on the 5 minute. Where is it on the 15? Yeah, it's being tested right now.
Day to day, quiet day to day.
Yeah. We'll see what it does with this this fib line right here. And that's a 5-minute green right there as well. So mark that. This is probably be a key area here. So the retest zone has already been taken. That's already been taken out, so that doesn't count. There's a retest zone up here. I think this is going to be a key right here. If it can bounce off of this green line, if it could keep on going. If it bounces off the green line and it comes back and checks and keeps on going, then I'll probably take my stop out. And we wait. How's our US Swiss doing while we're looking at that? This is pretty much the same situation. So the dollar is starting to gain a little bit of strength.
Mm-hmm.
It's trying to get a little stronger over here on the 5-minute. That's not too significant right there. That's just pullback area to me. Still weak over here. The Swiss is still strong. Not over. It's kind of right in the middle of the pack, so it's not overly strong. It was all the way up here. So basically, what's happening is the dollar is getting a little bit strong, a little bit strength as it gets closer to the market open. So this one's taken out. Take that one off. Then we're going to see what happens with this. Came right up, rejected it. I like these 5-minute levels. They're usually fairly, for the types of trading that we're doing here with the scalping, these 5-minute levels usually hold pretty well. You can see this is a pullback from the lower 25% area. Here's when we drew the fib line, this is the lower 25%. It did overshoot here a little bit. Now, what I will be projecting or looking at is seeing a wedge from here to here with a pullback, probably to the blue line. And that's going to form our wedge that we're going to be looking at to see if it's going to break to the bottom or break to the upside. Now, if this thing pulls back, it may not get us back in enough to get this, but if we take a short up here, another short up here, that'll dollar cost average to bring that up. Let me just show you what I'm talking about. This is not a bad area to take another short. So I'm going to take another market short, another position, and I'm going to sell market. And you go and watch where this thing pops up to. See, now that's my break-even point. So if it comes back down and retests the blue line, then I'll be break even there. I'll still keep my same stop up here for both positions now, because if it breaks this, then I'm going to be out. I'll just lose a little bit on that second position, and I'll probably have the full stop out on the first one. So I'm going to rechange this, reject it. I'll have my stop being at the 109.58 area, which is right there, and take profit. I'm going to be putting down to, I'll say the 109.43 area. I'll do a 12 pip. I'll just put it there. I'll just adjust it. move this back up to a little bit of a target. Let's see if we can get the break and come down to get both positions. Right now, I want this to hold. If this doesn't hold, then I'm just going to get out of this trade and then reassess. This move right now, this is probably a 21 pip move, I'll bet. From here to here. No, that's 11 pips. That's a Japanese yen pair. Usually about half of what you would normally be with the Swiss.
Yeah, you got a lot more room.
Let's see.
I'm assuming since EVA is relatively quiet, there's nothing happening on the indices either.
No, they're still positioning themselves, trying to figure out which way they want to go.
Well, scream when they do something.
I will. I will.
EVA had a great day yesterday and didn't scream loud enough.
Well, I didn't want to interrupt, but now I'm going to when I see something.
All right, Dozer.
She was being polite.
I was just quietly setting my own trades, but no, I will shout it out for sure.
She'll be a dozer now.
That's right, I'll be dozing.
That's great. So funny.
So far, that one's still good. US Swiss, we're still working with this one a little bit. Let's see where my next 5-minute zone is here. Yeah, so here's the green, here's the red. So this is the next 5-minute zone. If this thing breaks, takes it out, it could go on up here and retest. And that's way, but I'll get out of it. Actually, it should be a little bit above these pivots right in here. So be a little. I don't like it. I want to take my own stop out. Prefer. Here, that's still 14, 15 pip stop. I'm still good with my normal setup. Just want to give it a little bit of extra. Because here's that 38% retracement of that Fibonacci that we drew. Just see if it's going to respect that. This little area right here is going to be critical. If we get a close above this and pulls back, then we want to be out of this trade. Maybe look at reversing positions on this.
Mm-hmm.
But I want to see a 5-minute close, not a 1-minute close. I want to see the 5-minute close on this. So let's just go to the 5-minute charts on these. Now, before we, as we were saying, a couple of weeks ago, we were talking as we drew these Fibonacci's, those are the targets on the way up. So if we get a close above this Fibonacci line, here's the 38. Here's a 50, there's a 61. These are the ones we're actually were taken on the down move coming in. Now, this is starting to retrace. If it starts taking out these zones, we're going to be looking at reversing positions and going long. So if we get a 5-minute close above here and comes back and retest this area, I'll reverse position and then go and catch it because that tells me this thing's starting to, this will be the first target, second target, third target to the upside. So, but right now, this is still, in my mind, is still a pullback until we get that close above this 38. Then when we get the pullback, we might have, this might be like our wave 1, wave 2 of an Elliott wave, then wave 3, wave 4, and then wave 5 up there like that.
Al?
Yes.
When you have a moment, you may want to look at the German. It's not ready for my 5-minute yet, but your 1 minute is looking pretty good. So you might want to have a look and see.
Okay, the fibs up there, 15-minute fibs. There's a blue line right there. Here's our, let's see, blue, red.
Kind of waiting for a pullback there.
So we need to have okay, so you're looking at this little area right here to take it, pull back, and then put your entry right above that.
Well, right now, on my 5-minute, I'm waiting for it to finish its ascent, and then I'm going to wait for the pullback. And by then, the indicators, the MMAs, will straighten themselves out according to the rules that I need to get into a trade. So it's starting to untangle themselves. Let's put it that way. So it's getting close.
Now this little yellow dial line. That's the pivot. This last little pivot over here, which was made during the middle of the night at pretty much at the London Open. So if this thing comes up, breaks, and the pullback, then you can put your entry just above that for the run up. Is that correct?
Yeah, don't forget now I draw my fib on the 5 minute. I don't use the 15.
Well, let's just go. We'll just go with the 5 minute here. This is going to be a key pivot to see if it can break this little pivot right here.
Exactly, which is why you have to wait until it finishes doing what it's doing. I do anticipate to take along, but I can't anticipate what my entry point's going to be until this move finishes itself.
Right, then it has to pull back.
Yeah.
And then you can put your entry probably pretty much like right above in here.
Just a little bit above the high point.
I just got stopped out of something. Yeah, I just got stopped out. And see how's our Swiss doing. Looks like this is about to. Looks like this thing may start reversing positions, which means we want to look at using this as with a pullback to take it long. This thing does seem to be. It's breaking a lot of different trend lines here. And if you get stopped out with a small stop, if you get stopped out and then you just reprogram your brain to say, okay, well, maybe it's going to be going. Looks like it's maybe going to be going up the upside, and just reverse positions on it, and then you have this target right here to be looking at. Just because you get stopped out and lose on one trade doesn't mean you can't reverse it and then make it all back and then some. But you don't want to revenge trade. You don't want to be saying, okay, well, I got stopped down. I'll see if I'll show them. That doesn't work. See, this could be like wave 1. This could be a wave 2 of an Elliott wave. Let's try another tool here. It could be wave 1. This could be wave 2. Wave 3 cannot be shorter than the 0-1 leg. And wave 4 and then wave 5. Let me go and move this over. So if we have this leg right here, I'm just going to draw a stick. Where's my stick? We go from this point to this point. Wave 2, 3 cannot be shorter than wave 1, which means 3's got to be all the way up to here, at least. And wave 4 can be anywhere back as long as it doesn't break like wave 2. It's probably going to be somewhere right about this area. And then wave 5 would be on up. Somewhere along in there. If this is so right now we could be looking at this leg 2 to 3 area right here. We get a little bit of a rejection here, then this is on the DAX. So if we get a little bit of rejection, comes back, then we could be looking at this as being a target. And look where that green line is right there. So this could be a nice little trade here. My Swiss just got stopped out too. Yep, got stopped out on both of those positions. So that one didn't work very well today. Move on. Here's your rejection. Still on a 5-minute chart. So if I understand you correctly, Eva, you're going to do a buy stop.
Buy stop, yeah. I'm noticing on my chart that the
what price?
Pullback is just starting.
Right. So what price would you put your buy stop? 50, 73, 30. See, it's right at 20, 15, 728. So 15, 730.
It would be no. I think that would be a little bit too high. Actually, for me, I wouldn't even set it yet until it hits the 23 on my fib. It's
Oh, I
not
see.
even,
Okay.
I don't consider this valid yet.
Okay. All right. So let's do that.
So it's got to at least hit my 23 fib before I'll even consider, because
There's
it could keep on going up yet.
So the 23 fib is right here, right at this yellow line. If it pulls back to yellow line, then you're good to go.
Hang on a second. I was looking at mine. Sorry. So where is your,
Here's my 20, this yellow
Yeah,
line right here is
so
the
as long as
23%,
it,
23.6 pullback.
for me, even a wick works. If it wicks down to that line, it doesn't have to close below it, but it's at least got to touch it.
Okay.
And it looks like it's going to. So then I would definitely put,
All right, there it is. There's your
let me go
touch.
back to my chart so I can,
So buy stop to, I'm going to say, I'm going to be looking at probably 15, 30, 27. We can always adjust it here. Let's say 29. The buy stop.
I look to the left a little bit for the zone as well. Hang on a minute. I need to, I'm on the MT4, so it makes it a little bit
That's
harder.
okay. Yeah, just give me a
So,
number when you
yep.
get there.
I've got mine set for 15, 7, 28, 79. It's slightly above the wick to the left, which was back in July. So
28.80.
yeah.
All right, there's our buy stop. I've got it all set. We had our pullback. There's the wick. And I'd be looking at the target. I would be looking at a target. I mean, you're probably going to go for what, $5?
I'm going to go for a $5 move.
$5 move.
$5 move. So I'm going for 733.79.
Okay. Modify. Target. 737.33.
Yeah, 79. That's my target. And my stop loss, even though I don't actually set a physical stop loss, what I've decided is best is if it goes past my if it triggers my trade, let's put it that way, and then it decides it wants to come back under that 0 fib line that we drew and start going past the very first zone, then I'm out. And in this case, that would be if it passes 15, 23, 30. So it's no set like $10 or anything like that. I'm strictly, again, price action. That's where I see there's another little zone. And if it goes past that, then I just manually shut it. And
So
that's
here's
it.
here's a 5-minute fib line right there, the red one right there.
Yeah, that you see that little zone that's going on right there below yours, below the 0. So below your 0 line of your fib.
This right here.
Not the industrial fib, the fib you drew.
Oh, okay.
Or the industrial. You know what I meant.
Yeah.
Eva, can you share your screen?
I can.
Okay. Yeah, I'll stop sharing. Let you share it so you can show everybody.
Maybe a little bit easier.
Okay. You guys see me?
We see your screen.
Yeah. Okay. Yeah. Funny guy. So yeah, this line that I put here, this is where I'm going to have my stop, because this is the 0 of my fib that I drew from bottom to top. So with my trigger being slightly above that, and if it triggers it and starts going up, that's great. But if all of a sudden it decides it wants to come back down after I've triggered, once it passes this line that I've drawn in for myself, and that's basically based on this little area here. See that? Because that's a bit of an important spot. If it wants to go past that, then all bets are off. Then I'm just shutting it down on my own. And this happens to be my live account. So I now that I've got this set, I have to watch it. This is the one that I've been struggling with the S&P for so long. So I'm trying to kind of scalp my way out of it little by little. So it's still pulling back. But as you can see now, all the MMAs are starting to go in the right direction. These two should be flipped, the 34 and the 62. But all in all, everything seems to be going the right way. And if you look at the 1 minute, they're pretty much where they need to be. This is just a pullback that's flipped these guys over. That's going to change again. But I tend to look at the 1 minute to tell me what's going to happen in the future, because it seems the 5 follows it. A little longer, it takes it longer, but that's why I trade the 5 and not the 1 minute, because I like it to be a solid for my style of trading. That yes. So that's kind of where I'm at right now. So I don't know. Is that clear to everybody what I did and why I did it? Yes, no, maybe.
Yes to me. Yes. Yes to me. Everybody in the group.
Okay. So anyway, so that's it. And like it's still pulling back.
This is a
Which
pretty
is
strong
actually
pullback. This is a strong pullback. Yeah, the stronger it pulls back, the longer, the harder it's going to probably.
Exactly. Think of a slingshot.
Yeah.
The more you pull it backwards and you let go of that rock, man, oh man, can it go. So you can fully expect that if it's now pulled back to the 38, not that it will 100%, but you can fully expect that it is going to pull ahead to this 38 before it stalls out. May or may not, so you still can't keep your eyes off it. I still go for a $5 profit. I want it in the bag. So, and then I just wait for another setup. I move on to another chart. I do whatever happens, but at least I've got that money in my bank and I don't need to worry about it, because my mental trading brain, my BTE, as Al calls it.
Your BT indicator?
Exactly. That I cannot sit there and watch something that I want to be a scalping trade turn into something that's a day trade or possibly even into a swing. So it would just kill me and it would ruin my day. So that's why I set my $5 target. It more often than not hits it and I move on. And then I'm good to go. And then I'll come back to this guy when he finishes his move, whatever it's going to be, and do it over again. I've been doing that with the US 30. I've fallen in love with it too. Mind you, look at the indicators, but they're in the right direction now. You see, like they don't look as nice as I want them to, but at least it's the 5, 13, 34, 62, 200. So they're looking good. And I found with the US 30, it can move because it's almost a $35,000 index. Look at these candles, like wicks included, like even this doji here. The candles don't matter. It's the movement. That's like right there. You've got yourself an $11 move. And that's small. I mean, look at some of these other things. So if I set my target on this thing, I set it between $10 and $15. And it just depends on what it's been doing that day. Has it been super wicky? Are the candles bigger? But let's just call it a $10 target. Okay, let's find a little wee guy. Let's find this one here. What are you? This guy by himself is just over a $6 move. And that's a little one. I mean, the rest of them all have wicks. So those are all considered moves. So it's not even the body of the candle that matters. If it triggers here, for example, if I'm doing a sell and wicks right down, it'll just shut me down. Even if it goes up again, it doesn't matter. I've got my $10 move in and I move on. And it's super, super lucrative, this one. You just have to watch it. You can't just set it and walk away. But honestly, as long as you set your, again, because I don't put the manual stop losses in there, I know when I want to get out. I'll sometimes draw it in with, just a line. If it passes that, then I get out. But boy, oh boy, sometimes, like yesterday, I had one of these ones sometimes you have to wait. You set it up and sometimes, look at that. Sometimes you have to wait. But yesterday I was in and out within 10 seconds without a word of a lie. I told the guys, it's like, Brian, oh my God, you wouldn't believe what just happened here. And I wasn't even looking at it anymore at that point. I did my analysis, I set my trade, And until it gets in, I'm not concerned with having to watch it. And it was in and out in 10 minutes. I didn't even realize it was done until I looked down and I saw that it was gone from where I had set it. So
That's cool stuff.
Sorry?
I said, that's cool stuff.
It really is. And that's what you need to look at. The more value there is in that index, the longer the move can be. So I don't mean, make it like you're looking for a $50 move. I mean, by all means, try. I'm not saying it won't work. Like, look at this guy. What did this guy just move now from wick to wick? That's a $28 move there, guys. And it's still not finished. And this is a 5-minute candle. So think about the possibilities of that. So just to be on this, and look at it, it's still going. I mean, if I would have had this set up, I would have been in and out a long time ago. So it's something to look at. And look, there it goes. I mean, if you're a little more of a daredevil, you can sit in it and watch it do this. I'm not. I can't stomach it because I know how quickly it can turn on you as well. So very lucrative, the Dow Jones right now. And as Brian likes to say, it works until it stops working. But right now it's working.
It'll work until it stops.
That's it. So there we have that. So now, okay, so this guy, I'm not sure what he's going to do at this point.
All right, now it's pointing back to about the 40% retracement of that big leg.
Yeah.
But right now you're not in the trade, so you don't have to worry about it. So when it snaps back, if it does take off, this is a base rally type of move. It will get you in and out of that trade pretty much right as what you usually try to do. Is that as it breaks through the top, it just keeps on going.
Yeah, and again, if it wicks into there and comes right back, and that's okay because your wick just triggered my take profit. And I'm happy with that. So that's just my styles. I just would rather do it short little take profits and, be pretty darn certain it's going to happen for me rather than I just have too much angst. I can't sit there and watch it. Like I could very easily put something up here. It would drive me absolutely insane. So I can't do it. And then what happens with me is because I can't corral my emotions. It's like, oh no, it's pulling back. It's never going to get there. Oh no. And this is all the stuff that goes through my head and I'd close it down anyway. So this way I just set it. And this is based on me doing this, like many trades on these indices with this strategy that I'm using right now. And these are more often than not, this will very easily hit the $10 mark on the German. Or the $5. Which one is this? This is $5, right? This is the $5. Very likely that it's going to hit $5 from entry. So that's,
As you said it, you know your own emotional inventory. That's the key. It doesn't matter how much money you make or how good you are until you can figure out what your emotions are.
Exactly.
And once you do that, it gets a whole lot easier.
Yeah, some people can accept they start getting real excited about a 2 or 3% drawdown, and other people I'm really comfortable normally with a 10% drawdown. I'm perfectly comfortable with that because I know you have to allow that volatility. But some people are good with 30%, 40%. But biggest thing is you have to be able to know what your comfort level is, and then trade within that comfort level, or else you're going to be spending an awful lot of emotions in the trading world.
Hey guys, just let me give you a little insight. We were talking about this yesterday. We are worried so much about drawdown. Everybody talks about drawdown when we're trading. Drawdown. Most people that come into something like an Auvoria Prime and start trading on their own are cognizant of drawdown. But the fact of the matter is, if you're in a 401k or any other type of investment, you're not going to be watching it every minute, every 5 minutes to see what your drawdown is. You would be shocked if I told you some of the mutual funds I was involved in, the amount of drawdown that they were involved in without the customers knowing about it. Because at the end of the day, in the long-term picture, the returns were still there. But they don't realize when you give your money to somebody else, you're taking a risk that you don't even realize, and you feel good about it. But when you start knowing about it, your emotions get wrapped up into it. So don't think that these guys who are doing mutual fund type investments or EFT type investments or even precious metals aren't experiencing drawdown. They're just not telling you every day. And that's the problem with our mindset. We have to get our mindset around drawdown is important. It's going to happen because you can't pinpoint everything. And what amount of drawdown can you handle? And I can tell you that there was a mutual fund back, golly, that'd been 99, I guess it was when we were doing it. It was an 80% drawdown. And that was just for a day. That was a crazy, crazy day, but it turned around the very next day. Next thing you know, they're up 20%. The customers had no idea that their particular one mutual fund was tanking. I had no idea. And that's because when you do things like that, you usually invest and you don't worry about it. It's kind of like that with trading too. If you're good, especially if you're a swing trader, I think even put it best, if your emotions can't handle that long-term mindset, then you need to be scalping down and find that skill to get it smaller and smaller and smaller. But like Al, he said 10%. I have no problem with 15, 25, 30% drawdown. It doesn't bother me as long as the system in place still will come back. And it usually does.
Exactly.
But it comes back down to that system and what your emotional inventory is going to be.
You have to find what your comfort level is. It's what Brian's comfort level is or what mine is going to be different than what yours is. And because everybody's situation is different.
Yeah.
And there is no get rich quick.
And there is no get rich quick.
No, it's a lot of hard work, and it's a lot of figuring out exactly where your headspace works best. Because, as we keep saying, who was it? It was Dante that said after your presentation, Al, at Orlando, all the indicators in the world are not going to help you if your brain is not right with what you're doing. So you need to have your emotions in check. You need to figure out what you can deal with and what you can't deal with. And I can slap anything and everything on here, but if my mind's not right, then my trades are still not going to be successful because of what I am doing. I'm closing out too early, or I'm getting in a wrong spot, or whatever it may be. Like if you allow your emotions to take over, then you know what, it may work for a little while and you may get lucky for a little while, but it's basically gambling. It really is.
Yeah.
It's like the slot machines. Every now and again, you're going to get a winner, but all in all, you can walk out of there with crying because.
I equate trading. You'll hear me talk about trading and golf being one and the same. They pretty much are. You play golf long enough, and most of the time you're playing your last worst shot. You're always playing your last mistake, and you keep going back because then all of a sudden you have that one nice shot, and you go, "Okay, I'm ready to go again." That's gambling mentality of trading. If you're gambling, you wait for that one winner and then you think you've got it solved. That's how I play golf. I go back because I have one shot out of 100 that are really fantastic. And the rest are big mistakes.
And all it's costing you is the entrance fee, the green fees, right?
Absolutely. I'm more than willing to pay for that, though. That emotional inventory. True story, though. I did have a friend who invested in Bitcoin, $2,000. The very next day, he had $23,000 in his account. He got so jacked up that he went ahead and tried to do it again. And I told him he was an idiot. And he ended up losing the $23,000 completely.
Wow.
He thought he had solved it. And I said, dude, what you should have done is invest that 2,000, make the 23, invest 2,000 again. And if you can invest that 2,000 5 times in a row and get the same result, then you can increase your capital.
Yeah.
But it was luck. It just happened to be perfect timing.
Yeah. See, this is really slowed down. So you could sit here for a while waiting for it, but you know what? Yeah. The picture hasn't changed yet. So
love that.
And if it does, all that means is it's going to be going down. And this sitting here, I mean, I'm not going to leave it there for days on end, but even if I come back, and for now it's just.
And also look at the time. We're 10 minutes before 9 o'clock, and a lot of times you'll start seeing some major moves on these indexes right around the 9 to 9:30 area, The indexes are, because that's where the pre-markets for the U.S. markets are, and they're starting to take their positions, and you'll start seeing some good moves between 9 and 9:30 on the indexes. And then once the market opens up, then they go crazy for about 10, 15 minutes, and you don't know which way they're going to go. So that's why it's best to be out of them by that time.
Yeah. So
it looks like we got whipsawed a little bit with that Japanese yen. It's just the dollar is now getting near the strength of this. If you look at our
you want to share your screen again?
I'm staying in it. I stayed in it. I stayed in the short.
Did you?
US yen. I'm taking it to a day trade situation.
I got stopped out, so
I was just short of being stopped out. But we'll see. I'm willing to accept that loss. It's okay.
And so here's our Hercules. You can see right now the Canadian dollar is taking over the first place, and the Swiss franc is so right now we could be looking at the CAD Swiss, possibly, or see even that there's a lot of volatility that we're getting these things all over the place today, which is a little unusual. Usually a little bit more stable than that. Remember, today is this is Thursday. Tomorrow's non-farm payroll Friday. So a lot of positions are being taken for that. The first week is always kind of who knows what type of thing. But right now, I'm not seeing anything that I'd like to hang my hat on. Probably, if anything, I'd be looking at maybe even that. There's nothing for the weakness. I'm not seeing any real. New Zealand possibly. Even that's starting to move up back and forth over here on the 30-minute. I'm not seeing anything that's real, what I call real stable right now. I think I'd probably have to wait till the U.S. market opens up before I'd want to jump into anything else right now. But this DAX, I do like the setup on this. Had a nice little pullback, had a 40% pullback of this move right here, 40% pullback. And now if that's a rally basing, now it's basing a little bit more. Usually if you get like a rally-based rally, it's usually about one candle in between. Nice so 5 minute, nice little run up, a little red candle in the middle, and then it takes off. This one's having a little bit more of a flag pattern type of going on. And I'm still going to keep this up to see. I'm still looking, I still like this for a target, the next fib line, which is a little bit more aggressive than what Eva's got. But there's value in both of them. I really think if this thing goes, it's going to keep on going for a little bit. But it could go up, get her filled, not get me filled, come back out, and so hers is more of a short bet. And what you could do is maybe take two positions and just do one with hers and then one with a little bit longer run. Take two half positions. But we will see what it does.
Love it.
But aren't you glad you didn't take it long here? You want to wait for it to pull back and then give that room so they can shoot back up again. Right now, there's no emotions going on. Just we're not filled. It's just going away, and looking for maybe I might get a better entry. It may come down here and give you an opportunity down this end.
And that's why I added to mine. I think it's going to move downward, but we'll see.
That was on your U.S. Swiss.
That's U.S. yen.
U.S. yen.
I pulled it, initially going in as a quick trade, didn't work out. When I added a second position, I decided to make it more of a day trade, maybe 2-day trade. Stop loss at 22, I think it is now, 23. Maybe it's 23 because I did the 21 mindset. And we'll see what happens. We do have news today, though, right? Al, you said?
We have
already happened.
It already happened, yeah. There's some more news later on this evening, 7:30 with the 7 o'clock with the Aussie.
Good. That's good for us.
But here at 8:30, we have unemployment claims at 8:30 on the U.S. dollar. That's why the dollar started getting stronger again. The Not sure why that was, but. Anyway, about 4 more minutes. Any questions, comments? Anybody want to see something real quick before we go?
And I put registration for those who want to see one of our early Hawkeye evening sessions. I put it back in the chat box for you guys.
And what time's that tonight, Brian?
That will be 8 p.m. Eastern.
8 p.m. Eastern. Okay.
Mm-hmm. You can't see my link. It's in the chat box. Can everybody else see the link in the chat box? Scroll up a little bit.
I did see it.
You can.
Okay.
Do they have the link to our Trade Masters Telegram channel?
I can put that in there as well. Just let me do that real quick. Telegram.
Danielle, let's scroll up a little bit.
Yeah, scroll up.
Saying if you're interested in one of our first Hawkeye swing sessions, the link is right in the body of that chat.
Copy link. Let me go ahead and put that in there for you guys.
Moment to say how great our attendees are.
Yeah, they've been great and very encouraging to me.
I feel like I know them all, and I've never met any of them face to face.
Well, they would be thankful for that.
I feel like I know Brian. I've never met him either.
That's true.
For that, I'm thankful.
Brian and I have been working together for what, 7 years? Like, it's not
7, 8
face to
years
face yet.
Just to tell you,
that far apart, are you?
to tell you how my mind was working earlier, you said, Al, you said, all right, call out your number. You know, you were talking about where in the trade. I was thinking 8675309.
That's your phone number?
That's a song, dude. you're of the older
guys.
You're of the older type when you get 8675309. You go, is that your phone number? That's Jenny's number. My wife went back behind me. She says, yeah, that's Jenny's number. Jenny, I got your number. I so bad when you asked. I so bad when you said call out your number. I was going to say 8675309.
Yeah. Now I got it. Jenny's phone number. Jenny's number.
It's Jenny's number. It's Jenny's number. Poor Jenny. Yeah, whoever really had that number is in trouble.
Brian, you're bad.
I know.
Almost like a stalker song. No wonder they never play it anymore.
Yeah, it is a stalker song.
Wow.
Good times. I'm gonna miss being with you guys next week.
I'm gonna miss you.
It's gonna be weird.
Oh, you're gonna have to get in whenever you can, Brian.
Yeah, I think the first week will be a little rough. You know, because we got to get everything organized and figure out where everything's at. I'm in a completely different room now. So just
give a recess and come into the room for half an hour.
I guarantee a bunch of third graders, if I said, okay, guys, we're flipping it. We're going to 30 minutes worth of work and 8 hours worth of PE and recess.
Yeah.
Give them a box of crayons and say, go to it.
Do it the California way. We're doing less work and more play.
That's it. There'll be time for that when you're adults.
All right, gang.
30 minutes of lessons.
It's like about 9 o'clock. It looks like it's showtime. Right? So,
wow.
Again, we'd like to thank everybody for coming in. Sorry we didn't make some money for you today, but hopefully you'll hang in some of those trades. I got stopped out, but Brian's still in, and I see a couple other people are still in. We can't win them all, but we can win most of them. So, anyway, take care, and above all, stay green. We'll talk to you later.
Tomorrow.
See you guys all tomorrow. Have a great rest of your day.
Take care. God bless tomorrow.